Bank of England and the FCA ran a joint survey and found that around 75% of UK financial firms are already using AI. Not planning to, not piloting it in some lab somewhere in the distance, okay? They're using it now. And that number covers the banks, the lenders, the insurers, the institutions sitting at the center of the mortgage industry. Now, most brokers I speak to, they have no idea this is already happening at the scale it actually is. They're still treating AI as some sort of future conversation, something to think about later. And meanwhile, the infrastructure around them is already changing. Now, that is not a reason to panic, okay? But it is the reason to pay attention, because the brokers who understand what's actually shifting and why it matters for how they work, they're going to be in a very different position to the ones who find out too late. So here's what this video is going to give you. It's going to give you a clear, honest picture of where AI is already being used across the UK financial services and what that means specifically for mortgage processing, what's actually changing, what it means for how your cases are going to be assessed, and what you need to do differently as a result. There's no like hype in either direction. It's just going to be a straightforward picture. So let me be precise about this because it matters. That 75% figure comes from a joint survey by the Bank of England and the FCA. It covers the UK financial services firms broadly. So that is banks, insurers, asset managers, lenders. It's not a stat that says 75% of mortgage lenders specifically are using AI to process your applications. That would be a big stretch, okay? But what it does tell you is that AI is already deeply embedded across the financial services sector and that the mortgage industry sits inside that. And within that, lenders are using AI for things that directly touch the mortgage process. So affordability assessments, document processing, fraud detection, anti-money laundering. Those aren't abstract applications. They map directly into what happens when a mortgage case lands on a lender's system. So when I say AI is already in the mortgage process, that is very true. It's just worth being honest that we're talking about it being embedded in the wider system, not necessarily a robot reading your suitability letters, okay? Where it shows up in practice though is credit risk and affordability assessment is probably the most established area. Lenders have used automated systems for years, but the sophistication has increased significantly in the last few months. AI can now assess a much wider range of data points, in not just whether income meets a multiple, but patterns in spending, consistency of income, financial behaviors over time. Some lenders are already using bank statement analysis tools that do this automatically as part of the assessment process. Now, for you as a broker, this has a practical implication. The factors that influencing a lender's decision are no longer just the headline numbers on a fact find. A client with a solid income but a messy spending pattern, or a self-employed client with variable income cash flow might be assessed completely differently by an automated system than they were by a human underwriter. That's case preparation knowledge, okay? It matters. Document processing is the second area. Mortgage applications involve a lot of paperwork, pay slips, bank statements, accounts, proof of deposit, ID. Verifying all of that manually takes time and introduces lots of human error. But AI document processing tools can check authenticity, cross-reference figures, flag inconsistencies quickly. The result is that clean, well-prepared applications move faster than they ever used to, and the inconsistent or poorly prepared ones get flagged way faster too. This is genuinely useful for brokers who prepare their cases properly. It's going to increase that speed of decision, but it also means there's less room to rely on a follow-up phone call to explain away something that should have really been addressed in the application. See, the system reads what's in front of it. Context that isn't documented, it doesn't exist as far as that process is concerned. Now, fraud detection and AML is the third area, and this is one that runs quietly in the background of almost every application. AI systems are already being used across the UK financial service industry to detect unusual patterns, flag potentially fraudulent documents, and automate anti-money laundering checks. For the vast majority of legitimate cases, this is just invisible. For cases where something doesn't stack up though, it's fast and thorough. Well, what does this change for how you work? Well, the practical shift is this. When a human underwriter was assessing your case, you had a relationship with the process. You could call, you could explain, you could add context. You could get a pragmatic decision on an unusual situation. That conversation is still available for sure, but increasingly it happens after automated systems have already made an initial call on the case, not before, which means the quality of what you submit up front matters way more now than it ever has. A well-packaged case, clear documentation, properly explained income, any potential flags addressed before they become problems, that's going to work within the process. A bare minimum submission that relies on the underwriter asking the right questions is a riskier approach than it used to be before all this AI stuff. This is the skill that genuinely separates good brokers from average ones. Not just lender knowledge, not just criteria research, the ability to look at a client situation, identify what an automated system might flag and address it clearly in the case notes and present something that moves cleanly through the process. That skill is worth developing deliberately and worth developing now. Now, there are two things that remain completely unchanged, and I want to be clear about both of them. The advice is very much still human. AI can process data and match criteria. It cannot sit with a client, though, understand their full situation and make a recommendation that's genuinely in their best interest. That is regulated judgment-based work. A qualified advisor takes professional responsibility for that recommendation. No AI system does that. That protection exists for clients and it exists for good reason. And the trust is still built between people. The reason clients use brokers isn't primarily product access. Most lenders are reachable directly online. It's because buying a home or remortgaging is stressful and people want someone they can trust to look out for them. That trust is built through how you communicate, how clearly you explain things, how well you look after someone when something goes wrong. That's yours. AI doesn't touch that. So if you're new to the industry, there are three things that you need to look at, okay, with this. First, prepare your cases properly. Document your client's situation clearly and thoroughly. Don't submit and hope. Submit and be confident that everything the system needs to see is already there. Second is get comfortable using AI tools in your own business. So research, case preparation, client communication, content. The brokers who use these tools to work smarter are going to be more effective than the ones who are ignoring them, okay? This is not about replacing your judgment. It's about freeing up more of your time for the work that only you can do. And the third then is invest in the human side. The admin and the process work that the AI handles is time you get back. Put it into client relationships, follow-ups, and visibility. That's where your long-term value is going to live, and that's where no system will be able to replicate that. So AI is already in the UK financial system and is already touching the mortgage process. The question is not whether that's happening, it's whether you understand it well enough to work with it rather than around it. The brokers who pay attention to this, who adapt how they package cases and double down on the human parts of their business, they're going to be in a stronger position because of this, not a weaker one. And if you think that brokers are going to be replaced by mortgage advisors, you want to check out this video that I broke that question down in more detail. Give it a click.